Thanks for staying on with us. Let's connect with Sanjiv Bhasin, who's joining in on the show with his top recommendations. Sanjiv, thanks so much for taking time out. Let's begin then by talking about the big earnings today. And in particular, you've got Auto that's going to be in the spotlight. What's the expectation from Bajaj Auto?
Yeah, good morning, Avan. I think Bajaj Auto numbers will be very stellar. We know that they are the largest exporter of two-wheelers, and that will be a very big icing because of the weakness of the rupee. Their two-wheeler market, particularly on the new launches, is seen a huge demand, and the conversion of EVs from their scooter side is seeing blockbuster demand. So I think Bajaj Auto, by the way, is at new highs, and I think it is headed higher. As a disclosure, we covered this stock much lower. And we still think in the two-wheeler space, this is going to be a huge outperformer, particularly because rural incomes have just started to pick up. Festive season is on the demand, and they have a very good portfolio which suits each budget. So Bajaj Auto numbers can be very sweet. Market may discount it because the run-up in the stock has already been there, but declines towards 5,000 would be a buying opportunity.
Declines below 5,000 is going to be a buy opportunity. What's your view then on some of those PSUs? Because it's an interesting data as well that we've gotten in the fact that you do have the PSU, stocks that have been in focus with respect to the government divestment plans, the likes of Punjab and Sindh Bank, LIC, IOB, UCO, etc. Some of the PSUs with the highest government holding. And of course, within the defense space, the likes of an ITI, Ircon, rail stocks, etc. have been phenomenal movers this year.
Correct. And, Avan, it's the underdogs which were doing nothing for the last 7-8 years, in the last 2 years have been the biggest outperformers. And because of the low, float, or the mutual funds and foreigners having less exposure, they have actually underperformed their benchmarks because of not holding those stocks. So who thought Coal India would be such a big outperformer? Similar is the case with a lot of the other stocks. I'll give you one name. For 10 years, for 7-8 years, fertilizer and chemical Travancore was available between 35 and 50. It had a very sweet dividend yield. But can you believe in the last 1 year, it is up to 700 rupees. I mean, it's just the sheer holding of some of the PSUs, which were always in monopoly businesses, and now the unfolding is happening, has been humongous. And I think that this is just the start, because we know that the under ownership pattern means that there will be a constant up and down, but any decline will be a buying opportunity. Secondly, Aman, remember that government, yes, will encash some part of it because they are seeing huge premium on what their holding is, and they can, reduce their deficit for whatever. But given the impact of the government balance sheets, I think GST collection, the current account, all is being boding well. So I would say you have to be selective here because a large part of the run-up has taken place, particularly in defense and railways. But like I said, the CPSE ETF is a very good exposure. It has 12 of the blue chip stocks. Try and buy that, the CPSE ETF on the for the PSUs.
All right. In fact, speaking of those PSUs, the government is looking to divest stake of up to 7% in HUDCO via the OFS and is likely to raise around 1,100 crores. But what about some of the other PSUs where the government has divested its stake, and which are the stocks that have seen a run-up in the year 2023? Let's get in Somit with all the details and highlights. Somit?
Well, the HUDCO OFS opens today, but the important part here is that the floor price for the OFS is nearly at a 12% discount to the current market price. Now, with this OFS beginning today, all the PSU stocks would remain in focus. Also, given the fact that Nifty PSA index has run up nearly 40% on a YTD basis, making its best yearly gains at least since 2009. Now, so far in FY24, there have been 3 OFS done by the government. Firstly was Coal India, where they have sold around a stake worth around 4,200. Then there was RVNL and SGVN, where they sold a stake worth around 1,300 to 1,400 crore rupees. And HUDCO will be the 4th OFS done by the government. Now, apart from this, which are the other government companies in which are the other PSUs in which government holding is the highest? Now, KIOCL tops the list with around 99% government stake, and on a year-to-date basis, if you see, the share prices of KIOCL have largely doubled. Then there is Punjab and Sindh Bank, which has gained nearly 29%, and government owns nearly 98% stake in the same. LIC government owns around 96.5% stake, but the share price of LIC have declined around 5% odd. In Indian Overseas Bank, they own close to 96% stake, and that has gained around 38% on a YTD basis. And lastly, in UCO Bank, they own around 95.4% stake, which has gained nearly 31% in 2023 so far. But which are those PSUs and which have gained the most, and how much does government own in them? Now, ITI is the PSU that has gained the most in 2023 with around 206% of gains. Then there is Mazgaon Dock, which has gained nearly 171%. Ircon International, which has gained nearly 167%. Then there is REC and IRFC, which have gained in the range of around 130 to 152%. Now, in REC, the government holding is the lowest at around 52.6%. But in other companies like ITI, Mazgaon Dock, Ircon International and IRFC, government holding ranges anywhere between 73 to 90% currently. So keep an eye out for PSUs in stake. PSUs in would continue to remain in focus.
It's PSUs, and we've just heard Sanjiv Bhasin's take on that as well. The other one, of course, which the street is going to begin the day reacting to is, like we just flagged off, Bajaj Finance's numbers. And the numbers, while they're largely in line, both on the NI, the PPOP, or for that matter, the PAT, there's still, Sanjiv, valuation comfort as opposed to its historical averages for Bajaj Finance. Given the leader that it is, I mean, yes, there is a little bit of NPA pressure, but you think the valuation comfort will see the stock through further from here?
Yeah, good morning. Aisha, I'll give you a small, playback. In January, February, when the Adani crisis broke out, Bajaj came out with a slightly weaker guidance, not numbers. And the stock got thrashed from 7,600 to 7,300 in no time. It's a problem of over ownership of FIs. Now they come out with the best of numbers and the stock seems expensive. But let me tell you, it's been a pedigree stock. We've already read from what Rajiv Jain says that we don't want to overstretch ourselves in smaller cities and smaller lenders where already there are 2 to 3 loans going. So they are very, very selective in their, dispersals. But it is also telling you that they are ready to raise capital, which means the next 6 months actually before the election and budget could be the best for spending. So always Bajaj Finance, Bajaj Finserv have always been expensive stocks, but they've always delivered, ahead of what the street looks like. So I think I cannot comment on it because we own it, but I think that any decline would be, it's a pedigree stock to own, just like an HDFC or a Reliance.
Kunal, 8093, good level to buy or add positions?
Yeah, it's a good level to buy Bajaj Finance. Even Bajaj Finserv, I think that stock has been an underperformer of sorts. I think there is a difference in terms of trends of almost 10% or 12% between Bajaj Finance, the positioning of the stock with respect to where Bajaj Finserv is, with respect to its relative previous swing highs or major highs for itself. So I would be of the belief that Bajaj Finance could be a good buy even at current levels. The stock has hardly shown any major periods of volatility and even a very sharp phase of a correction. I think that was seen somewhere in 2022, mid part, as well as prior to that. So, it's very rare that you get such kind of a sharp phase of a 10%, 15% swing into the stock on the downside. So, I think it's a good level to buy the stock.
Okay. One of the biggest Nifty, or rather liquid universe F&O movers yesterday was Canfin Homes. A 4% move coming in on Canfin yesterday, reacted to its earnings. The net profits, remember, rose about 12% to 158 crore rupees. And the NII as well saw an uptick of about nearly 26% in trade. So that really went well with the street. And this is at best a beat as opposed to what the street was penciling in. Naresh, come in on the charts first after that big move you had on Canfin and whether we can see a follow through or not.
So, post the numbers, if it can sustain above that, closer to this 780 mark, that would be a confirmation of a breakout. The stock has been sideways for the last 3 months, ranged between 730 to 800. Yesterday was good volumes, and today post numbers, if it sees price action above 780 would be positive. Overall, even at current level, 750 is a stop loss. So technically, sideways consolidation done for the last 3 months could see an uptick towards 850 also.
Sanjiv, so far in the earnings, we've only seen big disappointments coming from IT, and that too was much along expected lines, largely in the price. But do you sense we could see some howlers this earnings season, or do you think at large we'll be in line this Q2?
So Aisha, there are two positives. One, this even with the geopolitical risk and some of the profit taking because of high yields, the FI selling seems to have exhausted itself. Two, I think the destination India as a capital market and for inflows becomes very, very attractive in the next 6 months. Three, I think consumption and the way spending patterns are churning. And if you see the large caps which are raising capital because they foresee growth, then I think earnings can be, much better than what we expect in the coming few quarters. There will be sectoral churns because of higher crude, but it could add as an advantage and disadvantage both depending on the sector. So I think that definitely some of the banks can be very, very strong on the earnings, and particularly the large caps like ICICI Axis. I would also think that auto numbers will be maybe ahead of the street, and I would be looking out for Maruti because that has been a very, very strong performer. On the other hand, cement numbers again will be very, very sweet, and the further guidance because of a raise in prices will be again much on the anvil. So selective numbers, and like you said, IT, maybe the deliverance has been reasonable, but the guidance will always be a little conservative as you are aware of higher yields and the weak, geopolitical risk which exists for the time being. But selective outperformance will be there very much on the cards in select stocks, pockets, and stocks, particularly the PSUs.
Okay, that's the take coming in on the overall earnings season and what color we may actually see. In fact, talking about autos, even yesterday you had the likes of a Bajaj Auto hold out well. We've seen the performance that a TVS Motors within the two-wheeler pack in any case has given year to date, or for that matter as compared to its peers. And yesterday you had Bajaj Auto as well scale up ahead of its numbers today. Sanjiv, just talking about the two-wheeler space, what's the anticipation on what the earnings could throw up?
Well, like I said, there has been almost 18 months of underperformance of two-wheelers for whatever reasons, higher rates, higher inflation, and the global scenario where rural incomes didn't pick up. But look at the change in scenario. Hero Moto is actually guiding on the upside on volume and margins. Bajaj Auto is anyway taking the cake. And we know that Eicher has been a very, very steady performer. And look at TVS, it takes your breath away. So I think definitely this space is a very, very sweet spot. And the coming 6 months will actually bode even better because government spending, rural initiatives all add up to rural incomes where the aspiration on two-wheelers is very, very high. I would also add, in the four-wheeler space along with Tata Motor, you can see that Maruti is issued the highest number of shares at the highest premium at 10,400 to its promoter. And now you have Ashok Leyland, which actually is a dark horse for me, which can actually supersede earnings on all three counts. Their passenger vehicle, their buses, they are the third largest bus maker in the world, having 53% market share in India, and three, their internal small supplier which they have, which is growing called DOS, which is growing very popularly in the rural areas.
Sanjiv, good to have you on board. Thanks as always for joining in with your stock ideas and recommendations.